Record. Good morning, good afternoon, good evening. It's Friday, January 26th, 5:19 p.m. Another week has flown by, and here we are, another Friday.
Almost
How are you doing, Wawi?
good. I'm glad work is done today and we're ready for another podcast. Make sure everyone like and subscribe. It will help with our algo here on
Yes,
YouTube.
that would be awesome. Yeah. So, apologies for our audio difficulties. Hopefully, this week or this episode, as we are closing in to our 100th episode, hopefully we get to finally have better quality audio in the next few or the future episodes. So, welcome to episode 98. Is it a rally stalled? Actually, I haven't pulled up the data right now as the market just closed today. It's Friday, but together we're gonna find out how the market has reacted this week amongst the barrage of earnings report from the big S&P 500 US companies. So just a financial disclosure, me and Wawi are not registered financial advisors. We're here to share our thoughts and, we are invested in the stock market. So might as well do a little bit of deep dive in the companies that we're interested in as we're going to take a look at Wawi's stake in a few. So let's go on and proceed. Oh, by the way, Wawi, before we take a look at the sentiments for the week, I actually had played around with Google's AI called Bard, and it's interesting. Yeah, it kind of summarized some of the stuff that I was looking prior to our recording this evening. So I asked, how did the banks perform, and look for exact figures instead of going deep dive into their financial reports as we usually do. Just a shortcut. Bard is not like 100% error proof, but it's good that we can use this device or method of digging into companies' information, especially if there's plenty of them. So I asked, how did the bank perform for the fourth quarter of last year? It said it's a mixed bag, and then it generally provided me information. So aside from that, so this is an overall look. What I was interested in and happy to see, it did a deep dive on bank by bank, the biggest banks. So how they perform. So he's saying here, J.P. Morgan Chase, the largest bank in the U.S., missed earning estimates, which is accurate. Bank of America also missed estimate. Wells Fargo profit fell. Citigroup fell. Goldman Sachs is reporting on the 16th. So it's already 26. So Goldman Sachs and Morgan Stanley. So you could tell Bard is a little bit behind here. So I asked the question again, can you provide exact percentage decline in profit big US banks reported in the fourth quarter, please? So it said here on the fourth quarter for major US banks, decline in profit from JP Morgan is 16%, Bank of America 15%, Wells Fargo 16%, Citigroup 215%. So just to proofread at least one of them, Citigroup, I'm gonna go deep dive into its investor relations page just to see if we could really rely on Bard's information here. So this is the fourth quarter. Let's see its profit. If it did register any profit, net income, it actually registered loss, 1.8 billion loss compared to 2.5 billion a year ago. So it lost about close to $4 billion, and it didn't have any specific value how much of that decline was. It says here NM, so probably not mentioned or whatever. So it kind of goes hand in hand here. I would still, pay a little bit of caution if I'm going to use Bard as a investment research tool. But that's my experience with it. How about you, Ali? Have you tried using any of these AI or OpenAI or whoever?
Well, I've been fooling around with the Chat GPT, but it doesn't provide any financial information.
Right.
and I've been fooling around with some of the graphics AI, like uh, the one on Adobe
Uh-huh.
and DALL-E 3,
Oh,
and making some graphics.
I think you
And
have to pay for DALL-E, right? Also, subscribe to it or
yes,
something.
yeah, now you have to pay for it. It was free at one time.
Mm.
But that's good to know. That would be good for, like, if you're wanting to like get a quick summation
Yeah. Yeah.
going on with a particular stock or ETF that you're looking.
Yes.
Thanks
That's
for
true.
sharing, Mark. That's awesome.
No worries. Yeah, it's bard.google.ai. That's its website address. And you can, but just to double check, always double check with the company's filings once it convinces you that it has good facts in there. I won't rely on it 100%. So let's go on to our deep dive. Well, deep diving to sentiments and fund flows of where the money has headed in the past 5 days. So, sentiments among the American Association of Individual Investors, it came out a couple of days ago, 124. So, from 40.4% bullish, it went down a little bit, 39.3% for this week. Bearishness remained steady, 26.8 down to 26.1. So, not much difference. I would say this is like a similar week from last week. Aside, despite the fact that we are actually recording record highs in the stock market, everybody else is still passively, not enthusiastically greedy at this point. But looking at CNN business fear and greed, they're kind of registering different one. We're actually now in extreme greed. So a lot of greediness in the market, 77 from 70 points last week. The market momentum, look at that. While we have climbed all the way up there, we are at the highest point, as obviously can be derived from news headlines for the past 5, 10 days that we've been hitting market all-time highs. Actually, we record last week. Our title was new all-time highs. So bit of a good sign. So still a little bit of worrisome data here. Stock price breadth. I would say, this is a divergence. Not a whole lot of companies are actually registering new all-time highs. It's only the big tech, as Wawi and I highlighted last week, the three of them, specifically Microsoft, Meta Platforms or Facebook, and Nvidia. So Nvidia is relentless. It's been hitting all-time highs. So those three, if we're lucky, we have the time. We're gonna dive into one of the data that Lipper provided, which is very interesting in terms of dissecting the new all-time highs in recent events. So the volume summation, also a divergence, is going down instead of supporting up. So quite telling there. Put in call options, obviously, a lot less people are betting that the market would go down. Volatility is close to a 50-day moving average. So nothing to see in terms of volatility. It hasn't been up and down quite massively. So we're kind of steadily going up here. So looking at the fund flows at this point in time, this is from Reuters. So luckily they published this today, and luckily we are able to track it down. Cautious investors trim equity holdings before inflation data. Fed meet. So January 26th, global investors reduced their holdings again in equity stocks, leading up to January 24th. So a lot of selling, well, not a lot of selling, but some selling, I guess. A surge in global stock outflows. Oh, despite this, a surge in global stocks limited outflows, spurred by optimism on quarterly results from Netflix and a bullish forecast from Taiwan Semi and Super Microcomputer. Do you have any of these stocks, Wally? The Taiwan Semi?
No, I don't. I'm holding Intel and Nvidia right now,
Oh,
and I may have some others, but those are the two that I know I have quite a few shares.
Yeah. I used to have Taiwan Semi just because, it's the largest producer out there. But I'm scared because, China and US tensions is always in the air. So I just sold it. I think I got that conviction when Buffett also sold his. When I found out, oh, he sold his, oh, I'm gonna sold mine too. I don't want to join that downfall. But look at this. Taiwan Semi is actually going up 117. When I sold it, it was just around 95 bucks. So wow, look at that. 15.5% since January 1st. 24. Oh wow. I think it just hit all-time high too. No, no, it didn't. But it's up 26% for the past year. Pretty impressive. So let's look at the fund flows, where the money went. So investors sold US and Europe stock funds, 3 billion and 2 billion respectively. Oh, look at that. Wow, second week in a row, Asia. Oh, third already. Third week in a row, Asia has been getting a lot of fund flows, 2.35. I wonder if they're going to China. Tech sector primarily gained 2.47 billion. Wow. Biggest inflow since last November. Healthcare and energy saw selling $500 million each. So not a whole lot of love on healthcare and energy. I think energy is the worst performing sector for this year, if I'm not mistaken. No, not really. Wow. Okay. Not really. Actually, it's the best performing sector for the past week, energy. So those people who just sold close to 600 million lost this ride here, the 4.3% upside in oil or energy. So energy, communication services, financials are doing great. Technology. So the worst performing sectors, healthcare, real estate, consumer cyclical, and utilities. Um, so fund flows going back there. Debt funds again, as we have highlighted last week, a lot of money has been flowing into bond funds, $9 billion. Bond funds. I wonder what's in bond funds. Fifth consecutive positive inflows. What do you think, Wawi? Have you think people buying safety or just looking for steady yields and think the market will go down, or what's happening here?
Well, what I'm thinking is they're buying all these corporate bonds, trying to shore up these companies because they're probably banking on the Fed rate to come down March. Everyone is like thinking that the rates will come down March. So
Right.
that would be a good position. That also tells you that they're they're gonna get their money back, right?
Yes.
Once
Yes.
these companies start ramping up their businesses again.
True. Yeah, the good thing that you pointed that out because we're segueing into some rates here. I actually pulled it up earlier as I was trying to prepare for our recording. So actually, we still are seeing above 5% yields in US Treasury, but just 2 months, 1 month, 3 months, very short term. So yeah, you're right. I guess corporate bond investors can get higher yields at this time before the Fed starts cutting rates as they are expecting on March. But the question is, what if they don't?
Then
So
that's late for
yeah,
payment.
that'll be the ultimate. Yeah, ultimate. I don't know. Maybe we'll see. Short-term global, yeah. Look, even short-term global, 5.3 billion inflow, largest since October of last year. Even high yield funds saw 880 million flows.
So I think this is the second week we've seen some inflows into, or maybe 3 weeks since we've
Three
seen
weeks, yeah.
inflows into corporate bonds.
Yeah, and look
So
at this, well, the
positive
money
return.
market, they're showing hate right now. 18 billion selling out of money market. Net sellers for a second successive week. So I guess we have seen the top for money market.
Well, I see that as a bullish signal right there.
Yeah, the safe haven money now looking for other places to work. They're tired of being parked on the sidelines and missing the all-time high in the stock market. Commodities, precious metals attracted 200 million, their first weekly inflow this year. Energy funds, not a whole lot, 54 million. That's like a dime or a penny for the global money movement. Not a whole lot of conviction for energy at this point, despite it performing this week very well. Emerging market, wow, offloaded 2.8 billion equity funds. So I thought I saw like money flowing into Asia, but I guess emerging market is like still Asia, right, Wawi? Or does that include whatever? I don't know. What includes emerging market? Uh, so emerging market just saw the biggest net selling in 5 weeks, and also bond funds. So investors are pulling out in emerging markets, both stocks and bonds. That's pretty interesting. Oh, here we go. So it went to China, largest weekly inflow since
Oh, okay.
2015, Bank of America. A lot of money now is looking probably at the bottom in China. They're betting that we have seen the bottom, honestly. So they won't put, oh, look at that. $12 billion flowed into China this week, second largest ever. A positive sign. So hold on to there's Alibaba.
Oh
Value.
yeah. Oh yeah. I think that might be good to to get back into Alibaba.
Yeah.
That's still a big company to invest in China.
It is. And I saw news this week that, Jack Ma and Tai, one of his co-founders in Alibaba, have slowly started accumulating Alibaba stock again. Tai, I remember buying 150 million worth, and Jack Ma just bought 50 million. I mean, that's peanuts for him after selling, like his family, right? While we covered it late last year, his family selling 800 million, close to $1 billion worth of Alibaba stock. So not a whole lot of conviction still, regardless. I mean, 50 million is still 50 million, but in his status, he could have bought more if he wanted to, but he didn't. So I won't put a lot of faith on that. So I guess that summarizes for the China movement here, but it's good. Bank of America pointing this out. Um, so US stocks, according to Bank of America, surging to new highs as AI baby bubble. I don't know what baby bubble means. Tech stocks, according to Bank of America. So this is different from earlier. Earlier, we were using Reuters data. Right now, we're using Bank of America. So according to Bank of America data, tech stocks saw its third straight weekly inflow, 2.8 billion, largest since last August. So emerging market, in contrary, saw also a weak inflow of 12 billion, according to Bank of America. So this can get quite confusing for new investors out there. But mainly what we follow in this channel is from Reuters. So I'll stick with Reuters. I'll still probably weigh a little bit on Bank of America. Besides, it's also published in Reuters website. So not to confuse our listeners, but we don't intend to, but we just want to provide the data, and also that helps us with our investment thesis, where is that where actually the money is flowing. So yeah, this is also the sectors that we have discussed earlier. Hedge funds, even hedge funds now are buying, according to Bank of America again. Net purchasers for the first time in 10 weeks. So hedge
And
funds
there's
bought,
increasing confidence. Looks like there's increasing confidence in
yeah,
investors
yeah,
right now.
hedge funds. Well, they usually underperform the market. Regardless. So, all right, for the money, obviously, we're not going to dive into that. Maybe the volatility Bruce mentioned. Volatility is actually down 1.9. So, as we have mentioned earlier, there's not much volatility in the market. Nasdaq is flat for the week, despite, wow, Nasdaq is actually flat despite new all-time highs. S&P is also flat as well. Maybe we're seeing some consolidation here at the top end of things. But Yeah, before we dive into the earnings summary, we're gonna jump on to Wawi's take. What do you have for us this week, Wawi?
Well, we're talking about Alibaba, but if I can share my screen, I got the financials pulled up for Coupang
Oh, okay.
uh,
Let me see.
on, let's see, on
Okay.
Seeking Alpha.
Uh-huh.
Okay, if you can pull it up from Seeking Alpha, you could look it up.
Trying
Um,
to let me pull it up quick. Which company?
Coupang,
Oh,
which
the
is
the
the
Korean
Mall
company.
of Korea.
Yeah. Seeking
Yeah.
out. All right, we got it here. Okay. What should we do? What should we look at Coupang here?
So I've been holding this stock for quite a while.
Mhm.
Um, Maybe for about a year now, and so it's been down pressured because of current economic global situation. But I'm I'm thinking that if Asia is gonna start booming again, I'm thinking Coupang should recoup some of their market advantage, especially in South Korea.
It's pretty. Uh-huh.
Looking at their earnings the past 12 trailing months for let's see for uh, for this year we're seeing a gross profit of 5.7 billion versus what they earned in 2022,
Uh-huh.
which is 4.7 billion. I don't know if you're seeing the same numbers
Yes,
there.
yes. Yeah, right here. They're
Mhm.
growing for sure.
Yeah, and you can see the growth trend there. you
Yep.
know the I haven't checked their prices lately, their share price, but the share price doesn't reflect, you know, their current earnings, and
Yeah.
I haven't really dug down deep on their expenses.
Yeah, well, it
I,
shows that back in March of 2021, they were at $44 a share, and right now they're down to $14 a share. They're still valued at 26 billion.
yeah,
If we're gonna take a look at the valuation, if you don't mind, we got here in Seeking Alpha forward earnings. Oh, it's still a little bit pricey, 59 times for next year's estimate earnings compared to its median of 15. But you know, if anything, if everything is equal, Nvidia is still our top dog right now. It's at 40 times, right? If I'm not mistaken.
yeah, and I'm still holding it.
Yeah, I think Nvidia right now it's 31 even. 31 as of January 24th. So, if anything, if I'm looking at any growth companies, I would look at Nvidia first and compare how the you know next company that I'm comparing to. But yeah, aside from that, while I did a quick research, largest South Korean companies, I was thinking maybe one of the largest, but look at this, Samsung, 360 billion. And you could tell Coupang is still big. It's at top eight. So you got LG Energy, Samsung, Hyundai, Celltrion, Kia. Kia is even bigger than Coupang. So if maybe Coupang can recover its price, because it's like an Amazon in terms of service, right, Wowie? They buy and
Yeah,
sell. They allow buy and sell.
it's like an online retailer, but
Right.
unlike Amazon, I don't think they have the cloud services, of
Oh, they
course.
do have cloud services. Wow.
No, no, I'm not sure that
Oh,
they have it. I don't think they have it.
oh, okay. Gotcha. So which company do you have, or do you have anything else about regarding Coupang at this point, or
Well, you can check out Cava.
Cava?
Cava is something I just recently took positions on. It's a Mediterranean style restaurant.
Oh, okay.
Mhm.
Cava. It's like a Chipotle, but Mediterranean. So not Mexican, but Mediterranean.
Well, that I'm banking that it would be my like similar to Chipotle. I'm banking on its growth.
Yeah, Chipotle, I mean, that's another wild. I think it spun off from what do you call that? It spun off from McDonald's, right? Chipotle.
I'm not. Oh, I'm not sure about the story of Chipotle, how it got spun off. But you know how big Chipotle got, right?
Yeah.
And now with the health conscious people, population thinking about health, I'm thinking, Cava may capture some of that health conscious market.
Look, I'm using this Seeking Alpha tool and I hit peers. I think this is very helpful. So Cava is ranking with among the coffee beverage maker. I think this one, like it's like
Ooh,
Dutch
that's my
Brothers,
favorite, Dutch Bros.
yeah, Wendy's company, Just Eat, Shake Shack. So and also look at this, the stock price for the past year. So Cava is up 4.6%. Dutch Bros is down 22%. 12% down for Wendy's. Shake Shack is up 30%. So
Dutch
these,
Bros may be a better buy then.
yeah, yeah. But yeah, let's look at the any info on the financials, Wawi, or
Oh, sorry, I haven't pulled up it on my Seeking Alpha.
no worries. I'm looking at well, they for sure their revenue is growing for 500 million 2021. It went up 64 million the following year, and we're just waiting for 2023. But yeah, they're
Yeah,
definitely obviously still delivering losses at this point. And if I'm gonna take a look at the balance sheet here. Cash is $340 million. That's a lot of money. Or is it thousands? Let me see. Probably thousands. 340,000. Given its size, it's, not a whole lot of debt, which is good, but still making a loss at this point. Any other company that we you want to go through, Wally? Before we jump on the earnings summary.
um, I got another one. Hold on. Um, let's see. Well, I've been having Nike for quite some time now. It's rather struggling, sputtering,
Right.
but I think Nike is still a good buy.
Yeah, I
In
mean,
my opinion,
yeah,
it may have lost some interest there, um, and have a lot more competition. But Nike is a name brand that everyone knows.
true, true. Yeah, yeah. Nike is really good. They came out with that movie too last year, and I know with movies, sometimes if you get featured big time to the public, sometimes that
Yeah,
indicates it kind of peak already. Yeah, but yeah, look at this channel here since the pandemic. Uh, since June 5th, when the Fed started flooding the March started, they started flooding the market in March, but maybe since June 5th, they have this little channel. Well, not, yeah, little channel here until 150 bucks. But something happened here late December and it just started falling and up to until $85 a share. And from October 20, 2022 until now, we are in a range from 85 to 126. And right now we are at 102. So it's like a midway, honestly. We're at midway in this little channel here. So we're kind of middle. Wonder if it's gonna break down. Look, as late as as recent as September of last year, we were at $90 a share. It went up to 120 and
I'm
then it
thinking
sold
it's
off again.
being down pressured by forex.
Uh,
The current foreign exchange. Aside from negative publicity,
right.
but and of course some newer entrants to the market also pressuring it. But if they improve on their marketing, hopefully they can find another star to represent their company.
True.
That
And
might
oh sorry, go ahead.
that might push them up again, just like in the movie, right, where they were
Yeah.
looking for Michael, for a basketball player to
Yeah.
represent them.
NBA has gone crazy right now. Like they I just was watching some of the highlights and they're scoring like 130 over versus 120, 150 over one. That used to be in like all-star games, and now it's like a daily event. It used to be like 60, 70, win by two, clutch time. But right now, I mean, they're just shooting threes and scoring a
Man,
lot, big
but
time,
that's fast, right? They're moving fast.
really
The
fast. Yeah,
players are moving fast to score
yeah.
that.
I don't know. The game has evolved, honestly, as we can observe. But yeah, valuation, going back to Nike, valuation 28 times forward earnings. Median is 16 times, so it's a little pricey, but look at this seeking alpha tool, Peter. This is very helpful. Deckers, so Nike is, to begin with, is already huge, 152 billion in size. Deckers Outdoor, not 10 billion. Skechers, I mean, how can you compare? 10, 9 billion. On Holdings, 8.5. Crocs, Puma, 6 billion each. For the past year, Nike is down 19%, almost in a bear market. Like what was Dutch Bros? Puma is down nearly 40%. So if anything, Puma might be a bargain here. No, we're not saying you have to buy Puma, but just so you guys know. All right. Well, as I guess we're gonna skip to the earnings update from FactSet. Is that okay?
All right, man, go ahead.
All right. FactSet just came out with this report today, and at this stage, they are saying S&P performance in their earnings have been continued to be subpar as expected. So we already discussed this a couple episodes ago that a lot of companies, 69% of them, have actually well, a lot of them, not 69, but a lot of them have forecasted or downgraded their earnings. So that is below their 5-year, 10-year, even 15-year averages. So it continues to do so at this point of time. 25% of the companies already reported. And according to the data, according to FactSet, 69% have reported actual EPS earnings above earnings estimate, which is still below the 5-year average and still below the 10-year average of 74%. So a little bit of a less excitement going in. Despite that, we are experiencing all-time highs led by the, Magnificent Seven. Positive earnings came from multiple sectors led by industrials and information technology. So Magnificent Seven there. They were the largest contributors to the increase in earnings. Negative earnings surprise, I think we won't be surprised now at this point. Financials. Uh, but yeah, except for insurances are raking a lot of money. Actually, they're hitting all-time highs right now. A lot of insurance company. 7 of the 11 sectors reported year-over-year earnings growth. Communication utilities, consumer discretionary, because utilities haven't been performing well this year, right?
No, not in the past year, but I'm expecting it to do better
Yeah,
in
it's
moving
it's the
forward.
it's the third worst so far this year, negative 3.46%. So despite that, they are actually registering good earning results. Revenue, so sales, meanwhile, also as well, 68% of the companies reported above estimates, which is the same as the 5-year average at this point. Let's see if we could highlight some specific companies here. Okay, positive revenue surprises, industrial, communication services, and healthcare sectors, interestingly. Largest contributors in sales increase. So they are, in terms of studying a company to its bare bones fundamentals, these are the industries that are making business. They are making more business this last quarter. Positive surprise from healthcare, industrial. Okay, I'll keep repeating that. 9 sectors, led by 2 sectors here.
Well, healthcare is benefiting from technology. Look at how ISRG is
Intuitive surgery.
performing. Yeah,
Mhm.
there's a big demand for robotic surgeries and amazing results uh, in the surgical arena and amazing results in the Wall Street arena
Right.
as far as the technology.
Yeah. Maybe we could take a closer look at the healthcare sector in the next coming episodes.
Yeah,
But
I guess that would be my next take.
yeah, yeah, yeah. Highlight some of those big companies there at the sector. Um, Analysts. So for the year ahead, looking ahead for the first quarter of 2024, analysts are expecting earnings growth of 4.6% and then 9.4%. So a lot higher earnings second quarter of this year. For this season, for this whole year in 2024 calendar year, earnings are expected to grow 11.6%. So for the valuation of the overall stock market S&P 500, the forward price to earnings is already 20 times even as of today, compared to the 5-year average of 18.9 and a 10-year average of 17.6. So we're quite expensive right now. So just during the upcoming week, next week, 106 companies are scheduled to report. So a lot of reporting still. So scorecard for the earnings, infotech, consumer staples, and materials are the best performing. Financials, a lot of miss. Utilities, a lot of miss. For revenue, the ones who are generating a lot of new businesses, healthcare, materials, and communication services. So quarter four, fourth quarter growth. Worst performing are energy, materials, and healthcare. Ah, that's quite confusing here. Healthcare is also a little bit performing in the scorecard. So maybe one they get done with their earnings. But these are just all projections, though. Anything can still happen. So we are actually down to the last minute. Uh, I was hoping we could discuss some of these largest negative revisions for the fourth quarter. Well, I guess top three: Paramount, Caesars, Humana. They all sank in their stock prices. Largest positive: American Airlines, Illumina, and Fox. So it's we yet to see how they perform. Once again, thank you again for tuning in, and we're gonna cut things short at this point. Thank you guys. Thank you, Wawi, for joining us. This is
Thank you,
Mark
Mark.
signing out.
Guys, don't forget to like and subscribe.
Please like and subscribe, guys.